Welcome back for another Agix price prediction analysis, and in this video I will be sharing my next price targets, give you areas that Agix needs to continue holding here on the charts, and also discuss a chart pattern that has now given us a breakout to the upper side. And before I do so, show some love by first giving this video a thumbs up, subscribe to the channel, and also check out the channel membership. And starting the video by first sharing my Elliot wave analysis since the 10th of June, when we had this massive breakdown giving us a low at around the $0.17213 mark. We started gearing up impulsively, where we saw a complete 5-wave structure to the upper side, having the wave 5 giving us a high at around the $0.28216 mark, completing the formation of these larger Elliot wave count 1. And after seeing the formation of that first wave, we started a breakdown move in the formation of a larger Elliot wave count 2. And this second wave has also managed to get into the minimum retracement areas, which we can get by connecting the Fibonacci's from the low that we made on the 10th of June to that high at around the $0.28182 mark, giving me a minimum retracement area for the second wave between the fib level 0.5 and the fib level 0.618. And I can mark that target area here on the charts like that, between the $0.22645 mark and the $0.21338 mark, which is an area that we have now fully maximized, and there are high chances that we now have a low in place for the second wave, and soon we are going to see a reaction of this target area and start gearing up impulsively in the formation of a larger Elliot wave count 3, which is what we expect after seeing a breakdown move in the formation of that wave 2. And assuming that we are not going to get one more new low in the formation of this wave 2, I can give you target areas in the formation of that wave 3 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave, giving me a minimum target area at the fib level 1.618, and that is at around the $0.39398 mark. And that is the minimum that we can expect that impulsive wave in the formation of that wave 3 to the upper side to do. And before all that plays out, we first need to see a reaction of our target area, see a break above this descending trend line that I have here on the charts. And the moment we also managed to break above resistance at around the $0.227 mark and continue gearing up impulsively, and also see a break above the $0.28 mark, then that is enough confirmation that we have now started getting impulsive and we can fully maximize our minimum target areas in the formation of that wave 3. To also discuss a chart pattern that has been in formation right here on the charts, you can see that we have been seeing a bit of a breakdown here on the charts, obeying this descending channel to the lower side. And at the time of this recording, you can see that we have now seen a break above this horizontal area, that is this descending trend line of this channel to the upper side. And at the time of this recording, we now seem to be having a retest of that descending trend line before we can continue gearing up, see a break above resistance at around the $0.227 mark. And the moment that plays out, then we can expect a successful retest, break above this descending trend line, and then from that point, Agix can easily see a break above the $0.25 mark and possibly get above the $0.26 mark in the next coming hours. So that is what I'm keeping my eyes on here on the Agix chart. And in case further breakdown continues, then we need to continue holding within this yellow target area, which is the minimum retracement area for this second wave. And because of further breakdowns, I need to extend my target area back to the fib level 0.78, which is the last bullish support that we need to continue holding here on the charts. And as long as we are holding within it, we can expect, that is above it, we can expect higher prices in the formation of that wave 3. And a break below the $0.78 mark at around the $0.19523 mark, then that will be suggesting one more new low below the low that we made on the 10th of June. So that is what I'm keeping my eyes on here on the Agix chart. On the indicators, we are trading at around the 48 mark. On the MACD, we have been able to print a bullish cross, fully supporting higher prices. So let's be patient and see how that plays out, and I will be keeping you up to date.